something very important is happening in Europe right now, and most people don't see how dangerous it really is. This is not just about gas or electricity or politics. This is about something quietly breaking behind the scenes that could change the silver market faster than anyone expects. If you blink, you'll miss it. And if you understand it early, you'll never look at silver prices the same way again. Right now, Europe is facing one of the most severe energy shortages it has seen in decades. Gas storage levels are dropping. Industrial power costs are exploding. Factories are slowing down, cutting shifts, or shutting their doors completely. And hidden inside this crisis is a pressure point that directly connects to silver supply. Not demand, supply. And when supply breaks, price doesn't move slowly. It snaps. Before we go any further, if you value calm, real explanations instead of hype, make sure you like this video and subscribe to the channel. You're watching Silver Reset, and everything here is focused on helping you understand what's really happening beneath the surface, not just what the headlines want you to see. Subscribing helps the channel grow, and it makes sure you don't miss what's coming next, because the next phase of this story is already unfolding. Now let's slow down and walk through this carefully, because this is not a simple story. Europe's energy crisis didn't appear overnight. For years, European industry relied heavily on cheap natural gas to power manufacturing. From steel to chemicals to refining metals, energy was the backbone that kept everything running smoothly. When that energy becomes unstable or unaffordable, production doesn't just get more expensive, it becomes impossible. Silver refining is one of those energy-intensive processes that most people never think about. Silver doesn't magically appear as shiny bars ready for delivery. It goes through multiple stages of crushing, heating, chemical processing, and purification. Every single step depends on reliable, affordable energy. When gas prices spike and electricity grids are under stress, refineries don't simply raise prices and keep going. They reduce output, or they stop completely. Across parts of Germany, industrial gas availability has already dropped to critical levels. Some facilities are operating at reduced capacity. Others are preparing shutdown plans if conditions worsen. These are not rumors. These are contingency plans openly discussed by manufacturers and energy operators. And when refining slows in Europe, the effect ripples globally. Silver is a global market, but supply chains are fragile. Many investors assume silver shortages only happen when demand surges. That's not how this works. Supply shocks happen when production quietly disappears. And Europe plays a much larger role in refining and industrial processing than most people realize. When even a small percentage of refining capacity goes offline, the system tightens fast. What makes this situation especially dangerous is timing. This energy crisis is not happening during a period of weak silver demand. It's happening while industrial demand remains strong, while solar manufacturing continues expanding, while global inventories are already thin. That combination is explosive. Think of it like a dam. For years, pressure builds behind it slowly. Nothing looks wrong on the surface. Then one weak section starts cracking. That crack is European energy. Once it gives way, the water doesn't politely flow out, it rushes. This is where many mainstream analysts get it wrong. They focus only on price charts or short-term market noise. They ignore physical constraints. Markets can lie for weeks or months, but physical supply always wins in the end. You can't print silver. You can't digitize it. You can't promise delivery of something that isn't being refined. And while this is happening, most retail investors are distracted. They're watching daily price moves, arguing over whether silver will hit a certain number this week or next. Meanwhile, the real story is happening far away from trading screens, inside industrial zones and energy meetings where decisions are being made to shut things down. Let's talk about why Europe can't simply fix this quickly. Gas infrastructure is not something you replace overnight. Alternative energy sources can't instantly scale to power heavy industry. Importing liquefied gas is expensive and limited by terminal capacity. Even if political solutions are announced, the physical reality doesn't change fast enough. Every month that energy remains unstable, more refining capacity is at risk. Maintenance gets delayed. Equipment wears down. Skilled workers leave. Restarting a refinery is not as easy as flipping a switch. Some shutdowns become permanent, even if they were meant to be temporary. This is how supply erosion really happens, not with headlines screaming silver shortage, but with quiet, cumulative damage that only becomes obvious after inventories are already gone. Here's where it gets even more interesting. When Europe loses refining capacity, silver doesn't disappear evenly across the world. It concentrates where power and industrial infrastructure remain stable. That creates regional price distortions. Premiums rise, delivery times stretch. Paper prices may stay calm while physical markets scream. We've seen this pattern before in other commodities. The futures market lags reality until it can't anymore. Then the adjustment is sudden and violent. That's why people who wait for confirmation often miss the move entirely. At Silver Reset, the goal is not to scare you or hype numbers. It's to help you recognize structural changes early. And energy-driven supply shocks are some of the most powerful forces in commodity markets. They don't reverse easily. They don't care about sentiment. They just keep tightening. Now ask yourself this. If silver supply quietly contracts while industrial demand stays strong, what happens when even a small wave of new investment demand appears? It doesn't take a massive rush. It takes a spark. And energy crises create exactly that kind of spark by exposing how fragile the system really is. This is why you're seeing more conversations about physical silver, delivery risks, and long-term supply. It's not coincidence. It's cause and effect. People closer to the system feel the stress first. By the time the average investor notices, the easy positioning window is gone. As we move forward, pay attention not just to silver prices, but to industrial news. Watch factory output, watch refinery announcements, watch energy policy shifts. These are the signals that matter. Charts react after reality changes, not before. If this video is helping you see the bigger picture, take a moment to like it and stay subscribed. It helps more people find this kind of content, and it tells the algorithm that calm, thoughtful analysis still matters in a world full of noise. We're entering a phase where silver will no longer be just a trade. It becomes a stress test for the global system. Energy, industry, and trust all collide here. Europe's crisis is not isolated. It's a warning sign. And the most important thing to remember is this. Supply shocks don't announce themselves politely. They show up quietly, then all at once. The people who understand that don't panic. They prepare. As we get closer to the end of this video, I want to hear from you. Do you think the market is underestimating how serious Europe's energy problems really are? Do you believe silver supply risks are being ignored on purpose or simply misunderstood? Drop your thoughts in the comments. Conversations like this help everyone sharpen their perspective. If you found value here, consider sharing this video with someone who still thinks silver is just another chart on a screen. Sometimes one shared idea is enough to change how someone sees the future. This is Silver Reset. Stay calm, stay curious, and stay ahead of the story.